Okay, good morning. Welcome to the latest episode of Clarity Corner. We have Mr. Benjamin O'Malley of Oceanside CPA here to join us, and super excited. This is one of our last big things we're doing before Christmas time, and I understand you will have a very busy Christmas. Santa's got a trip to the O'Malley household a couple nights from now. Let's start just by introducing Ben. Tell us a little bit about yourself on the personal level, the professional level,
Hey,
and we'll dive right in.
dude, happy to be here. Glad to be on the podcast here. Yeah, my name's Ben O'Malley, and I have a wife and two kids, and we got a big Christmas coming up because it's the first year that Bryce, my oldest, will know who Santa Claus is.
Oh, he understands that there's
He's
something going on.
Yeah, we wrapped all the presents last night, and it's gonna be so much fun for them. So
Good,
yeah.
good.
Um,
So last year was he just there,
Last year he was
not-
just there
not-
existing, but this year he knows that Santa's giving him some presents.
Okay.
Has he been good this year?
Okay.
Has he been bad this year? So yeah,
Okay. Remy, is she gonna be how old?
she's almost 2.
Almost 2.
Yeah.
So she's
She's starting to talk and everything.
Okay.
So
is Christmas tree staring at the Christmas tree? How is
yeah, I mean she's more than that.
okay.
Yeah. Hey, I'm just glad my kids are super healthy now.
Yeah.
And it's been a rough early December, and we're just really excited to get together with the family.
Good.
So
Are the whole family's coming to your place, or are you going to your parents, or what does it look like?
multiple now.
Right.
Now it's
Right.
all over the place. We usually do Christmas Eve with my wife's parents, and then Christmas Day with my parents. So
Okay, cool.
yeah,
Well, for those that don't know out here, I'm a fan of Benjamin, not only for the person he is, but his name, because my son is also named Benjamin. Did not steal it directly from this Benjamin, but they share a name. It's my son's first Christmas. He'll be 3 months old here shortly, but his Christmas is just looking at the lights on the Christmas tree. That's it. We've got Santa. Santa is coming. He was no cold, but I'm not sure that he might hold some wrapping paper.
Exactly.
That's what I'm hoping for. So that's coming up. Well, let's transition a little bit. So how long have you been a CPA for?
since 2017. So
2017.
yeah,
So almost 10 years. Creeping up.
creeping up to 10 years.
Yeah.
Yeah.
And how long have you been in the accounting world?
Just one more year after that.
Okay.
So about 8 years. I
Gotcha.
got my degree from Salisbury in 2016.
Okay.
And then I ended up working at my first firm up in Baltimore.
Gotcha.
So yeah, it was I worked for I would say a larger regional firm for roughly 5 years.
Okay.
I was in the construction industry. I did audit and tax. So I really got to see both sides and kind of figure out where I wanted to go from there. When you work in a big firm, you really learn what it's about being an accountant, obviously with the amount of long hours that you have to work during tax season. Like everything that they tell you in school is exactly, what you do when you work in those larger firms in your first year. But the goal is that you work so much, you learn so much. I've never learned so much in my life in that first year.
Just grind.
Just grinding, doing taxes and audit. But honestly, I kind of knew that was going to happen in this career. And I think a misconception too is that you get to work kind of more delayed hours outside of tax season, but I didn't necessarily. I still worked the 40 hours, and then I did the, heavy 60 hours in tax season. So
Interesting. So so you started with that firm over in Baltimore,
yes.
and then at what point came back over to this side of the bridge?
So it was in 2020 we had our son, and then we decided that we wanted to be around our parents.
Okay.
And so we quickly moved back here. And I actually did an internship for actually a lady when I was at Salisbury University. And when we knew we were moving back here, I quickly made a phone call, and then I started working with her up in Salisbury. And then I was with her for about 2 years.
Okay.
So
And now on your own. So you built up all that experience, worked on that side of the bridge, worked on this side of the bridge, and then just at the start of 2024, 2025 or is it late 2024 went out on their own?
Yeah, so I knew that I needed quite some time under my belt to really feel confident enough to go out on my own. So, I mean, and after working for about 6 years as a CPA, I mean, I got to the point where I knew that I didn't want to work my way up, I guess, in a firm, you should say, kind of that track I was on. I really felt like, I'm more small book business oriented, and I just knew that I could do it. You get to a point in your life, you're like, this is me. This is what I want to do. I really want to drive things the way that I want to drive. And then so actually last year, it's been the 1 year anniversary of Oceanside CPA that I decided to that I decided to go out on my own and be a self-employed individual.
Gotcha. Well, 1 year, that's a huge milestone. I mean, we're going to be sitting here probably 10, 15, 20 years and say, remember when I was talking about your 1 year anniversary?
My kids are working under me.
Yeah, there you go. There you go. What do you think has been the biggest change from, maybe this is personally or professionally, from working where you were before to starting your own practice? All right, what do you think is the biggest difference in your day-to-day life?
Yeah, I mean, being a self-employed individual, I mean, that's the whole point, is just being able to have my own schedule, that I'm not necessarily waiting for someone else to take time off, right? So, I mean, the flexibility in that has always been a drive for me to be able to, become self-employed. But, I mean, in terms of being on your own, it's not easy when you're looking up tax laws. When I used to work in these other firms, I mean, I had someone with 30 years, 40 years of experience with tax law with one office away. And it was like, hey, what should I do? What should I do with this? So it was, when you're in that method, you kind of don't build up the confidence necessarily to feel good enough to go out on your own. So I don't know what switched for me, but as soon as that happened, you learn that you look up tax law yourself, you read tax law yourself, and then that was kind of the biggest, I would say, the difference for me. Probably the hardest thing for me when I went from that bigger firm to my own business is being able to read tax law.
And have to do the research, having to analyze, have to understand it and apply it. You've got to put every piece of the puzzle together instead of just 2 or 3 or 4.
Exactly. I mean, I didn't have my own software. I had to figure out what tax software I was going to use. I had to figure out, am I going to have bookkeeping, payroll services? So, my firm for the last year, I mean, it's been super successful, in my own eyes. And it's kind of at this point where it's like, what's really going to come into play in this next year or so. I mean, employees and things like that.
So. You're on the up and up, and on our side, it's fantastic to watch. So some of you probably already know Ben from working with Ben, but we've done some work together for quite a few years now, and have watched you start Oceanside up on your own, and we've built a solid relationship, professionally and personally. And one of the biggest benefits, not only just to us, in here when we're doing behind the scenes work, but to the clients and what they see, is how important it is for an advisor or planner, like it is on our side of the table, have a solid relationship with a client's CPA, right? I mean, think about how many situations we're in where just us having the existing relationship we have makes things get done so much more efficiently, practically. We're able to spitball ideas around and get it done like that, right? And it's because of that relationship. Not that we won't work with clients that have other CPAs from outside, we will, but that relationship's not the same, right? So exactly. I can see, I see the benefit. And, even when clients come in, they say, thank you for referring me to Ben. He's done a great job. And one of the biggest compliments that I always hear about you is how quick you are to respond to clients, which unfortunately is not a common benefit, I would say, for most CPAs out there provide, especially you've mentioned before, as they really ramp up the growth of their practice. There's a disconnect there. Your ability to just get things done on that side. From your side of the table, when we share clients, you know, and we can have those quick conversations and get things done. How much how much does that help you on your side? Having the relationship with us.
100%. I think it's just reducing the amount of administrative burden when it comes to speaking with clients, because what happens is if I'm not speaking to the advisor, I'm speaking to the advisor through the client. And whether sometimes that doesn't get accurately portrayed back to me or to that advisor, and there could be mistakes that happen. The other part is sometimes the client, and oftentimes doesn't want to deal with this back and forth, and I get that from a professional standpoint. I would like to deal with the professional, and not that I'm saying I'm cutting out the client in any way, but the fact is I can call the advisor up and say, hey, we're gonna do this type of Roth conversion, what are the interest and dividends look like, and I don't have to go through, another party to get any sort of this information. So, at the end of the day, dude, we're cutting costs, and
we speak the same language for the most part, right?
yeah,
I get too deep in investment language. You probably get too deep in tax language, but for the most part, whether it's with us or whether you're working with a client that has another advisor, you're right. You can get something done like that.
Exactly. And I don't think our relationship necessarily is always about reducing, the amount of tax burden each year either. I mean, our goal is for more of the long-term strategy. I mean, if we looked at each year minimizing your tax, we could just throw away the long-term goals here.
I'm glad you brought that up because, and you've probably seen it over the years working, how often, and I hate to call it this, but really it is the lazy CPA answer of just buy equipment, which sometimes that is the only answer to reduce taxable income to year and can be helpful for a business, especially if they're in growth mode or perhaps they need equipment. But you're right, if the approach the CPA has, or even an advisor, if they're helping with this, is only just to show the biggest deduction or show the lowest tax bill every single year, it's ignoring the future, right? You're kicking the can down the road. You're ignoring a huge fundamental just to get that one year tax bill down.
Completely
right?
agree.
Which is probably the most common, and we're all human, right? We don't want to pay. If you say, hey, you want to give the government $5,000, you want to give the government $4,000, 99.9% of people are going to say, I want to give the government $4,000. But you've got to blend in that long-term planning aspect and say, hey, is the juice worth the squeeze on doing this? How's this going to impact things 3, 5, 10, 15 years down the road?
Exactly.
Taking into the context of tax law, right? You've had a busy year. Last time we got together, you were just coming off, I believe, a conference focused on the big, beautiful tax book, right? That has got
pretty much. I mean, we've had some recent tax law changes from 2018, and then that have been, in my life as a CPA. I mean, 2018 was a big overhaul in the tax law, and then we come into this year, which is the one big beautiful bill, which I don't think is as much. And some of the stuff from 2018, did get pulled out further, like the QBI deduction. Right. But in terms of, the one big beautiful bill, I mean, there have been different deductions in play this year that's actually going to help us out, especially the senior deduction.
The senior deduction, which, this is the political realm where they advertise it as, the no tax on Social Security and then advertise the no tax on overtime, which it's all misnomers, right? It's I guess politicians can get away with advertising whatever they want there, but also goes to show why it's important to work with a CPA or a team in general, is because if you just were to turn on the news and see the headline and see no tax on Social Security, there's probably quite a few Americans out there that think that there's just simply no tax on Social Security anymore.
Exactly.
Understanding what actually happened in terms of tax law changes. Or
just going by, when the IRS comes to audit you, your response cannot be, well, this is what TurboTax said.
That's true. That's absolutely true. And that's why it's important. A lot of people, perfectly fine if they got a simple situation, like to do TurboTax by themselves or HR block self-service. But, if push comes to shove, you don't want to be the one having the conversation with the IRS or the comptroller of the state that you're in.
Exactly.
You need a professional there to be that middle ground and be able to speak that language and know where you can push and know where not to push and have all the context there. we're coming in the end of the year here in December. Your season's about to really ramp up in terms of workload. All right, January, February, March, April as the tax deadline. Question we always ask CPAs is, well, and we're trying to do, we're very proactive with the planning we do, or attempt to be, right? What are some common things you wish clients were doing towards the end of the year, if there are any, that would help them out come tax time or help them out in the future? What are some really basic, simple things clients can, or at least be on the lookout for?
Yeah, I mean, I think number one, the easiest thing is if you're able to tell your tax advisor of any changes, big changes throughout the year, because I feel like sometimes that we tend to be more reactive, because a client will give me their stuff in March and then the year's over with. And so we can't, make that vehicle purchase. We can't up your 401k account. So I think a phone call in, possibly October or early November, to really review, and I'm not talking about a long drawn out conversation or maybe even doing projection, but it's nice as a professional for me to know what kind of changes are going to take place, especially big changes in your life.
Right.
I think that's and then I like to say also, and especially for I would say 70% of my clients are self-employed business owners.
Okay.
So, at the end of the day, they are making many changes towards the end of the year based on how their year went, family life. So my season does start in January of the heavier season, but I would like to say that my year starts ramping up in October, because that's when my advising starts.
Gotcha.
Okay. Because like I said before, I like to be much more proactive with my clients on how we're going to end the year. At least they'll know where their tax liability is going to be, or, hey, let's do this to keep this down.
Yeah. I mean, that planning, I'm glad you mentioned like having a phone call with your CPA or accountant in the early fall months to figure out, all right, if there is changes that we can do before the end of the year, making sure we have enough time to implement those changes before 12/31. Now, there's always, you can get traditional IRA contributions up until the time you file. If it's a SEP IRA, that makes sense. You can get it up until the business files. But nonetheless, on our side of the table too, if there's any changes from an investment standpoint that we need to make based on that conversation with the CPA, that if that happens in September, October, that helps us out big time. If they say, hey, is there any way we can try to harvest additional losses this year in a non-IRA account? Do we need to get, additional IRA or distributions out for whatever reason? Do we need to adjust withholding? What does that look like? So I'm glad that you mentioned that, those proactive calls, because they're, and we'll get clients in too, a lot of times referrals in December that, sometimes there's things that you can do towards the end of the year, and sometimes there's just not, because you don't have enough time. But if those conversations are had earlier and action starts earlier,
exactly,
makes a big difference.
I'm not always my job is tough sometimes. Like, I bring bad news and I bring good news all the time. And I think that's probably the toughest part about my job and being in the industry, is that, our tax law changes and we can maneuver and avoid as much as we can. But sometimes you are in a position where, hey, this is a year that you are going to pay, a larger tax than other years. That's just what's going to happen. Yeah. Now, that could be just based on you're having a good year, right? Or less deductions. Maybe you financed a vehicle in the prior year. You took advantage of that. But and I just really want to say too, I'm definitely less of an advocate about purchasing a new equipment, financing a new vehicle, and more of an advocate of putting away in retirement accounts. I don't think a client's ever going to be mad at me when they have $500,000, sitting in a retirement account years later to be able to utilize, over buying a new vehicle that they just utilized in 1 year, and then there's no appreciation on it. So.
Yeah, exactly. Yeah. And it's just something we see so often. sometimes business does need new equipment, or sometimes there's so much cash that, that we can only get X amount in a deductible way into retirement plans. You still need to buy equipment, right? That's an often scenario, but yeah, I mean, you've seen it. I've seen it over the years too many times. It's just a lazy answer of, oh, go buy this piece of equipment or go whatever. But you got to have that proactive planning approach, and you've got to look at it. You do a good job too, I think, of looking at it, not just generally retirement planning, really looking at it long term, right? When we're bouncing around different potential pathways for a client, okay, this may not be as attractive an option. Like it might not appear attractive the first 5 years that we implement, but you're going to be thanking yourself 10, 15, 20, 25 years down the road. One of those things. Let me circle back. So you mentioned that the majority of your clients are self-employed business owners.
I would say so, yeah.
When you're looking to bring on a new client, is that the type of client you're looking to work with? Is a business owner? Is that what you would consider your ideal client, or is that just how the cookie crumbled and that's who you're working with?
I think it's just the blend that has, happened over the last year. I think sometimes when, maybe clients are reaching out for a new CPA, they'll see a younger face and they might, as a businessman, like, hey, I want someone that's a little bit younger. And maybe that's how, I got most of my business owner clients, but I also just enjoy it. So I'm not going to turn away from, one of these, because with, clients that do own businesses, I become probably a more integral part of their situation. I often feel like if I'm just doing their individual taxation for, possibly a retiree, right, we might have 2 conversations, maybe 3 conversations through the year if there's been any changes, or with Tristan talking about maybe some Roth conversions. But I do tend to be a bit more involved in a relationship if I do have a client that's possibly self-employed or does own a business. Which, serves me better at the end of the day, with that being said. But I try the best I can to be available to every single one of my clients, no matter the size, because I often, when clients move from another CPA, it's been pretty often, yes, and I don't want to say the word old, but they're older. Our industry does look a lot different than it did 10 years ago, with less individuals, possibly going out on their own. But also being able to get back to people in a timely manner is something that I'm finding has been a crucial step up in being in the success of my firm. And it's just stinks when I do get a new client that comes in and go, hey, I just can't get in touch with my CPA, or they are billing me an unreasonable rate to meet with them for, 10 minutes. And I'm not saying that I don't want to talk to every single one of my clients for all day long for free, but I do want to make myself, available as possible. And that if I'm doing projection, like I'm happy to do that, at a fee, but you would know ahead of time. So
well, and that commitment to service in general is very admirable, and something that we take very, very seriously here at Creative Wealth Management, and something that from the get-go we've prided ourselves on is getting back to clients. I mean, just think of you as personally as a consumer of any good or service out there. It makes you feel good when somebody is on top of whatever the issue is or whatever your question is, no matter how small it is. It's helpful to go to sleep knowing, hey, that person's take care of it. They've seen it. They've got eyes on it, instead of that question or situation entering the nether, which too often happens. And I think that's why, one of the reasons that, we love sharing cases with you and sharing clients is because we know you're going to deliver the same level of service that we would expect, the standard we hold here, and that level of communication. I mean, it's huge on that side. So, your anniversary is hit. We're about to hit for Oceanside.
Yeah, it's hit. I think it was November. Or
okay.
December 1st.
So you're in great, successful start to opening the practice. What do you see? What do you envision for the next 3, 5, 10 years for the business?
I think it's going to depend on actually the outside change of the industry. I mean, AI is taking over. So that comes into what services do I really offer here? I think that's another reason I do tend to take more self-employed individuals because, um, as TurboTax comes in and play a little bit more here with AI, the individual tax clients, right, are probably going to go away a little bit more. So then how do I, really guide, my practice into, a, a revenue generating
Yeah.
machine if I'm going to lose, part of it to AI. And I could say that with bookkeeping as well, where my sole focus is way more on client advisory than it's going to be on the individual services of, um, simple tax preparation and simple bookkeeping. I'm not saying that you can't be successful doing those, but I think our industry is going into more of consulting, a more of a strategic approach. I don't even know what the word for that I'm looking
Yeah,
for,
I'm
but
following that, and I think our industry in a way is heading in that direction too, because you know how easy it is to set up your Schwab or Fidelity brokerage account and
yeah,
go by. It's unfortunate you can because most people don't understand the risk, but you could go out and buy the most aggressive triple leveraged ETF out there in 10 minutes on your cell phone with all your life savings, right? Just like you could file your own tax return. Is it the smartest thing to do? No, but you can do it, right? Which your knowledge and expertise is going to be needed for the complex situations and the clients that value the advice that somebody with your knowledge, expertise, and experience has. And that's kind of how our industry is shifting too, is, there's plenty of people that just want to open up an investment account and make money,
hmm
but our model set up with our clients that engage us for an ongoing service basis is people have not just one complex situation, but complex situations over and over and over and over. And successful people in general, like to point out, value the advice of outside professionals, even if they're extremely smart, intelligent, knowledgeable persons. We have a couple clients that we share with you that they are extremely intelligent, very well versed in the financial world, very well versed in the tax world, but they're also smart enough to understand that, hey, sometimes even if I know A, B, C, D, E, and F, I need to pick up the phone and make sure that I understand G, right? And they call it Ben, they call it us, or call both of us and say, hey, I just want to double check, right? And it's that more complex planning and ongoing service world that I think things are headed to. So Roth conversions have been really a hot topic the last few years, it seems like, that come up, and sometimes they're situationally right, sometimes they're not. What are some situations from the CPA side of the table where, maybe some hypotheticals where you think a Roth conversion makes sense or where it might not?
um, yeah, if you're a retiree before age 65 and you're in a low income bracket, and we can get that um Roth IRA over, we definitely should be doing that. I mean, the goal is to get that Roth conversion over within, I would say, the 12%. I mean, 12% bracket would make sense to me, and be able to fill that bracket up and then get that money converted over for liquidity reason later on, for IRMA, change, things like that. So if we can get that over in a lower income year, then we definitely want to do that.
Right. Well, and what's tough though is, right, a lot of the lower income years happen to be when people are generally in their 20s or 30s, right? They're making less. And then you get 30s, 40s, 50s. Those are high earning years, but those also might be the years that you want to do the Roth conversion because you're thinking ahead and you might be sitting down to do your planning. But it's good that you bring up the IRMA, because if you don't do any Roth conversions, right, and it's building up a giant IRA is great, right? Don't get me wrong. But when you have to start taking those RMDs and you're on Social Security, Medicare, that IRMA might come as a huge surprise, especially if you've got giant RMDs.
Exactly, because I think the misconception is if I defer enough of my tax and just accumulate the balance that, I'm going to be in a lower tax bracket. But if you're shoveling a lot of, you have a big IRA balance, that's probably not going to be true. I don't know where tax rates are going to be in the future either.
Right.
But, getting that money, if you can convert it over, is definitely going to be helpful. And it's not all, you're right. Like, it's not everyone's situation to have to do that. Another thing that I'd just like to point out too is to not pay the tax through the Roth conversion.
Do not withhold. Pay it on your own the outside is what you're saying.
Exactly.
Right.
Yeah, we want to convert as much money as we can at that 12% bracket, whether you're single, married, head of household, to be able to utilize that whole bracket. We don't want to go buy these. And I think that's one of the issues that I often see when, I obviously have a retiree come to me, and then I maybe point them to, a financial advisor. And then it's just the time has passed. When we could have had that money converted over at, 0, 10, 12% bracket. And, once a year goes by and you don't do that, it's gone. You've lost the ability to do that.
Yeah. Well, and filling up that 12% bracket is huge, and why it's important to have a CPA, but have a CPA that has a relationship with your advisor, right? So that you can proactive. I always think surface level, this is just every situation's different, is if you're going to do those Roth conversions, the younger you are, the better, right? Because as you're suggesting, do not withhold the tax bill in the conversion, right? Keep those dollars invested and working, but it's still gonna be counted towards the taxable income on the year. So from an investment perspective, you have to do the Roth conversion. The tax hit is a hit, even if you're only in the 12% bracket, it's still taxable. But the equation is you've got to have that converted, and then it's got to be invested to make up all the taxes you just paid before you get to that break-even point, right? So a lot of people don't think to do the Roth conversions maybe until their 40s or 50s, and maybe they've properly coordinated with you or their CPA, and it makes sense to do. But oftentimes that you just don't have enough time to make up that investment growth and get to that break-even point on there. A lot of people, though, just blindly do Roth conversions because they think they hear it and maybe they see something online, think it's just a good idea without the appropriate coordination involved. And you got to appropriately coordinate, otherwise you're not helping yourself on that side. It's funny that you brought up you don't know where tax rates are going, but me and you both have these conversations with clients all the time, and trying to figure out, hey, do we pull from an IRA? Do we pull from a Roth IRA? What's the purpose of this account? Do we do a Roth conversion? Do we use a non-IRA? If we were a betting man, what way do we think tax rates are headed long term? Right? Do we think where we sit in the year 2025, tax rates are going to be more or less favorable than 2045, the way the government's headed? I mean, you share your thoughts on that.
Yeah, no, and I think like your strategy, I think they call it sequencing, being able to pull from the correct account and, possibly taking a hit on, taxes now to reduce the tax later. I think it's just it's all a long-term strategy. And yes, we are in the dark about, tax rates. I'm kind of a mix of both where, I don't necessarily think they're going to go up, and I necessarily don't think they're going to go down.
Think you're going to linger?
Yeah, I do.
I'll find different ways, though. The government will find different ways to get...
Exactly. Like, reductions come in, the credits come in and pass. And
2026, 401k high earners not being able to put the catch-up in the Roth. That's a little thing that people don't understand. That's the way the government will try to claw back some of this tax money. They'll play with the RMD age, the RMD tables.
Yes.
So you're right. You're probably right in terms of the general tax rate. It might not be like an upfront change in terms of that headline rate, but they'll get it in this way or that way. They'll pull from here. So when we do that, the sequencing, right, planning, if we've got a client that's got IRA dollars, non-IRA dollars, and Roth IRA dollars, we've got to look at the purpose of these accounts. But it all comes down to, well, A, the purpose, but B is, what do we take the bird in the hand or two in the bush, right?
Yeah.
And do we rip off a small tax Band-Aid now to perhaps avoid one in the future?
Yeah. I have a perfect example. I had a client the other day email me about the 2026 changes to putting into for the catch-up into his 401k. And he said, hey, Ben, just found out that I can now put away, $31,000 or whatever is with the catch-up. So excited. And he is, his tax rate is he's in the 45% with state and federal. And he's all excited thinking that he's going to get this deduction on the 401k. And I'm like, hey, you do realize that it's going to be a Roth catch-up contribution. So you're going to pay tax at your rate of roughly 45% or so.
Yeah.
I would probably think otherwise. I would riddle that money and take it, put it in a brokerage account, and
And there's going to be people that change things based on that. Maybe not year one.
yeah,
Okay, maybe they'll get to the end of year one, and a
Didn't
lot of people won't
realize
even,
it.
yeah, they won't even realize it. They're like, "What the heck happened to my taxes this year?"
yeah.
You know, all of a sudden they've been putting this catch-up contribution. It's got to go to the Roth. We've had quite a few conversations here the last couple months with high earners that just did not realize that that change is going to come into play. And I don't blame them. The reaction is oftentimes disappointment, saying, "What the
Yeah.
heck?" But those are those small things that, you know, that they'll slip in that not great for, and it always hurt even the middle class. It's that group that gets hit the hardest, right, on
100%.
these changes, because generally speaking, middle to, I'd say, upper middle class earners, the 401k with pre-tax contributions is oftentimes the only way they can significantly do anything to reduce taxable income, right? If you're going to cut out a third almost of what they can do that by, that's huge, right? Because if you're a 1%, if you're extremely wealthy, chances are you've got other tools at your disposal, right, to lower that taxable income. Maybe you've got other businesses, you've got multiple LLCs, you're going to depreciate this, appreciate
Right,
that.
W-2 income earner in this country making over $150,000
Yep.
a year.
Get the short end of the
You
stick.
get the short end of the stick every single
It's
time.
terrible, right? And then if you're, you know, the lower income levels, you're not paying much in taxes anyway. So it's just that group that keeps getting smacked. And but all circles back to why it's important that we do this proactive planning that's coordinated with the CPA, right? Because, you know, we want to, it's a balancing act, the seesaw. You want to keep that tax bill in check now, but you don't want to hinder yourself too much in the future, right? Tax rates might not change. I think they've got to at some point, right? This national debt burden, they're saying some of this tariff revenue is coming in to offset it, but there's been no real change in the way our government spends money, and it doesn't appear there's any major changes on the horizon with the way our politicians spend money. So at some point, you know, that can's got to crack and tax rates have to jump. It's just going to be who's holding the bag. Most likely middle
Yeah, I
class,
agree.
right? I mean, at the end of the day, they can spin it however they want, but that's
Yeah.
what it's going to be. Let's talk a little bit about the biggest mistakes people make tax wise, right? What would you say is the most common mistake? What would you say is the most detrimental mistake, or, you know, however you want to, you know, think about that question?
I mean, if we just look at my self-employed business owners, oftentimes they'll go buy a vehicle that's under 6,000 pounds, and then
Okay.
they think I can accelerate the depreciation on it and write it off 100%. And with a passenger, you know, automobile under 6,000 pounds, that's not true.
Really?
So there's a cap
Okay.
there's a vehicle depreciation caps on different pounds on your gross vehicle weight
Okay.
that come into play. So I often see that, and it might not be, that might be something that when, you know, when a client is switching accountants, right, and they come over and they bought the vehicle, they're ready to put the vehicle in the business, and then I have to tell them bad news, right? Hey, like if you go and put permanent signage on that vehicle, no matter the weight, we can definitely write it off for you, but that's usually not the case.
So people think they go to make a decision without fully understanding
Yeah,
the fine print, so to speak.
of the tax deduction, especially with depreciation, especially with rental prop. We live in a, you know, an environment down here, especially where real estate is a big industry, right? And I have clients who will go get a mortgage on a rental property, and then they're looking to they have, you know, harvested tax losses on that with the interest and the depreciation on it. And these individuals make more than $125,000 a year. Well, there's an income limit on being able to take losses on real estate. It's passive income. And so those losses will get carried over from year to year, and it'll be able to utilize against future income, but you're not utilizing those losses against your active, you know, W-2 income.
Right. It's got to be carried over like to like, right?
You know, unless you're a real estate professional, then, you know, we can utilize those losses. But that those are just going to be carried over, for the future years. So
Yeah.
I think that's one of the other, big issues that I do see.
All from lack of proper coordination, right? It happens. Um, another thing too, you are not a fan, I know, of putting people on extension and going out past the April 15th deadline. Um, Clients, I'm always curious, and maybe your group of clients you've got uh, that they don't do this. How often, though, have you seen over the years where people the first week of April or a couple days before that filing deadline saying, "Here's my tax stuff," and how?
Yeah, it happens.
Yeah.
Luckily, it wasn't as big of a burden. I would say this year than it kind of has been. The other thing too is it's not that the tax return necessarily has to get filed on April 15th, but if there is any tax due, then the tax needs to be paid by April 15th. So quite often, if I do get a bigger return in the beginning of April that I just can't get to it because of maybe possibly a business return, then I will do the best I can to project what that income is going to be, right? Have them pay in the tax by April 15th, and then I'm able to get to the return like a week or two later.
Gotcha.
So yeah, as long as the tax is paid, the IRS doesn't care, right? As long as the extension's in and tax paid. I would say this prompts me to something else I do say as well is if you do create a new LLC, that let's say it's a partnership return, right? That partnership return, you need to get an extension in by March 15th. It's not April 15th, right? The extension needs to go in March 15th. The reason I say that is because when you don't get the extension in and you file a return in September or maybe some other date later on, you are going to be subject to penalties for each member of that partnership, right? So that can significantly stack up. I had a client that had 3 LLCs, never did an extension, actually never filed on time, and he was hit with a $15,000 penalty. Good news is the IRS does have a first-time abatement program where if you do call them and you have no other tax liens and you've been compliant, you file those returns, they grant, in this case, they granted a $15,000 waiver of those fees. So that is on the table, but I implore you that if you do have a partnership return, please put an extension in for yourself or contact a CPA to do the extension for you.
No kidding. Well, and that's the key point there, but also having somebody that you can speak with the IRS if a situation like that comes up, right? I don't think it'd be smart for me, Joe Schmo, or any other person there to call the IRS and try to work through that abatement program or negotiate, right? You've got to have a trained professional.
You can. I'll say this too: is you can easily to do it yourself, and if you're knowledgeable of your situation, you can get that first time abatement. It really kind of depends also on the other side if you have a decent IRS agent that you're dealing with.
Okay.
I think one of the other misconceptions, just to bring this up with a CPA, is you might wait on hold for 3 hours with the IRS. I probably will wait on hold for 1 hour. I do not have a direct line to their office. I do have a taxpayer hotline, or I'm sorry, a tax preparer hotline, but I am still going to wait on hold for a bit. So I do not, they don't know who I am either. And I also, to speak on your behalf, just for anything else, I need a power of attorney, or I need what's called third-party designate. So if I do sign your tax return, I have to indicate that I can speak on your behalf as a third-party designate. That does not mean I can tell or instruct the IRS to do things on your behalf necessarily. There's a lot of limitations still in that, right? If you did owe tax to the IRS, I cannot get into a payment plan unless you speak to the IRS. That is one thing that I feel like that needs to be, people need to understand that if you do owe tax debt, I am not able to get you into a payment plan unless you are on the phone too and you can speak on the behalf.
Gotcha. Understood. Well, that's great information because me myself, there's nuances right to that purpose.
Exactly. And honestly, that doesn't really come out of tax law at all. It's just the fact of how the administration of our IRS works. So,
Do you think filing plenty of federal returns, state returns, which gets trickier, state returns or the federal side?
sometimes it can be, I tend to, well, if you need to meet in person, if you have an issue and you get a notice from the IRS and you need to meet in person with the IRS, that's going to be very difficult to do. Now, there's an office up in Salisbury, Maryland that you would be able to go to, but an appointment is going to be set out like weeks later. If you have an issue with Maryland, being able to get an appointment at the Salisbury office is so much easier. You could actually get an appointment next week with them and they can resolve your issue pretty quickly. So I would say dealing with the state of Maryland is definitely a lot easier than the IRS. Dealing with Delaware has been very difficult, honestly.
Really?
Because we've had such an influx of people coming into the state of Delaware.
Yeah.
That their system, I can tell by just when their letters come out for audits and things like that, it's been like years later when they're catching things. So I would say that Delaware is super hard. And calling Delaware, I've been able to get through pretty easily, but then, the agent is almost like not someone that's well versed in the tax law or even in Delaware law. But you have to almost speak to an auditor now. And to get an auditor on the phone, you leave a voicemail there. Oh, it's just
They're playing
so
tag.
difficult.
Yeah, we had a client recently that just had a Delaware hiccup, I should say, and had a bunch of trouble getting to somebody and then getting it resolved. It took way longer than it needed to. Maryland pension exclusion essentially is a certain amount that you can pull.
It's pretty strict right now.
Right. And in layman's terms, it's basically a certain amount that you can pull out from your 401k, a qualified plan, right? And then that you're still federally taxed on it, but it's not included in your state taxable income. Is that correct?
Yeah, so there's going to be what's called an exclusion amount that you're able to exclude from your Maryland income. It's a direct subtraction of your income, and the goal is, so right now, I mean, it's really only up to the pension. So yeah, it's like the 401k qualifying income. So IRAs are not included in that, and the goal is hopefully in the future that IRAs will be included in that, so that I think the exclusion, it goes up every single year, but to get a $30,000-$40,000 exclusion would be super helpful. But like I said before, it's really capped to the 401k income. So we're hoping in the future that there will be it will be IRA.
I mean, that'd be massive for IRA distributions to count towards that exclusion, which I believe the reason we're having this conversation is I believe there's a bill. I don't know if it's lost in the House Assembly or it's within the legislative branch at somewhere in on that train to include IRA distributions as part of that exclusion. I mean, that'd be huge because how many retirees end up, once they retire, they roll their 401k into an IRA because 401ks, here's your investment lineup. That's all you have to pick from on that side. So
if you're living off your distributions and, you have $60,000 of taxable income and you're wiping more than half of it away for tax purposes, I mean, you're not paying tax on more than half of your income in Maryland.
And if you're a state, drumming up these tax laws, you'd think you'd want to make it more desirable for retirees. I mean, that's how Delaware has been built up. Maryland on the Eastern Shore. Pennsylvania is a great state for retirees, right? Mm-hmm. Retirement distributions aren't taxed at all. There's just these little things that I think states could and should be doing to, enable this group to continue to, build their wealth and then eventually pass on legacy-wise, right? Let's transition over to something a little bit more fun. So you, for those of you who don't know out there, have a twin brother, right? Kevin. Who identical, looks just like you, but don't worry, I can tell the difference looking at you too. Pickleball stars, both of you. So how long have you been playing pickleball? And
Yeah.
tell me a little bit about your pickleball endeavors, because we've got a ton of clients, and pickleball's huge in this area. But we've got a ton of clients really into pickleball. It's something I played a little bit in college, but it's always a treat hearing you
Yeah,
talk
because we were
enthusiastically about it.
kind of the goats around, and I mean, like in terms of when it started. So, we have been playing since 2013,
Wow.
in the gym of Ocean Pines, and I don't even under. I don't even know how we got started playing, but we had been playing, and I was driving 3 hours to go play for like 4 hours of play. Like I was driving across the bridge to Baltimore to go play with better people. So, like those that whine about not having courts around here, like we used to drive so far. So, but yes, we've been playing for quite some time now, and has just seen the sport evolve. And the amount of money that's generated now is insane.
It's
So
nuts. I see it on side. I've got the pickleball TV channel down at him.
they do,
It's
right?
So you can watch pickleball, and it's crazy. When I first encountered pickleball, I was in college, and they had it as like an intramural, and I was like, "This is neat." But I just thought it was like badminton or a small sport that you just did at a party or something, right? And since
Yeah.
what 2013, but I would say over the last 5 years, just this area has blown up. So you guys have run some
Yeah,
clinics.
it's been really, what's that?
You guys have run some clinics teaching people.
We had, so yeah, part of my other my non-CPA business dealings is I have a pickleball company called PKLN, and we run clinics once a month. They're all over, so follow us on social media if you want to check out the next one. We just have new merch coming out for our company, and then also what we do is we make it fun and enjoyable. So it's not about showing up and already knowing how to play pickleball.
Right.
So the goal is that we attract people that don't know how to play pickleball, or maybe they're just first entering the sport and they just want to play on a non-judgmental place. And me and my twin brother will take you to a court, we'll teach how to play. So you walk away after one of our clinics knowing how to play the game. So we tend to get about, I would say 60 to 70 people at each of
Really?
these events. Yeah, that's been up there. I mean, it's fluctuated a bit. We have, so for winter time, we'll be down at Snow Hill, Worcester,
Yeah.
the county complex.
Yep. I pole vaulted there, indoor pole vaulting and track and field in high school. That's where we did our winter meets there. That's awesome. So build up the pickleball
Community around here, yeah. And I mean, people need their taxes done in the pickleball community too.
That's true. I think it's good. We're always, we see you, just the nature of our business. We work with a lot of retirees, and you see, usually there's two types of retirees that stay active and do pickleball or just doing something, and they
Pickleball and golf.
Yep, they tend to have happier, healthier, more enjoyable retirements, and then oftentimes, and this is a huge part of what we do when we have a client about to retire. A lot of us, our main purpose for the last 30, 40 years has been work, right? What are you going to do once that purpose is changed, right? You've got to have different activities. Pickleball, I think, is just fantastic. And that's good that you're doing the events and stuff.
Yeah, we're hoping to get some courts around here. We have some at Ocean Pines, but obviously they're HOA owned.
Gotcha.
And so we're hoping that we can get some indoor, courts somewhere in the Berlin area.
How's Bryson with the pickleball? Interested in that, or is it tough to?
Oh yeah, he can serve.
He can serve. Do you think you've got a future?
He can serve. He's going to be, because my whole family's in it and playing and stuff, and then he will. Yeah.
Good. Appreciate you joining us here. Really good conversation. Value our professional, personal relationship, and look forward to watching you continue to grow your practice and trying to figure out new ways we can continue to better serve our clients together. I think what we're doing here is really just the beginning, and excited to see how your practice grows and how we grow and how that all meshes together. So wish you and your family the best Christmas.
Thanks,
and,
you too.
hope you guys enjoy your time off and, rest up, because you got a busy late winter and spring.
I do. I
Coming
do.
up.
I'm praying April 15th.
April 15th on its way. So if you'd like to get in contact with Ben, reach out to us. Happy to make the introduction. Lexi will go ahead and put the contact information for Ben in the information for the video. And any other questions, feel free to reach out. We're both happy to talk with just about anybody, about anything tax or financial related. So thank you for another episode of Clarity Corner, and looking forward to next time.